Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex-technical-analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. As we look at the week that was in Forex, we see just a couple things. First of all, the lack of clarity in Europe. We see a continued deterioration of the economic data coming out of Europe. And then the possibility of Greek exiting the euro seems to be increasing. The prime minister said that that's what he thinks is going to happen, the former prime minister. However, there was also a survey, and 80% of the people in Greece said they want to stay with the euro. But they don't also, on the other side, they don't agree with the austerity measures that the euro is implying. And then also, there was a European summit about a Euro community, the countries come together and doing a Eurozone bonds. In some countries, Italy, Spain, the pigs, they're certainly in favor of France. But countries like Greece still are against it because they're saying it encourages more debt, especially for the countries that already have a lot of debt. So there's still uncertainty about what is going to be the resolution for Greece, some of the other countries, France, Italy, Spain. What's going to be the resolution, and how is the euro going to come out of this? As far as the price action of the week, with all of this uncertainty going on with the euro, we saw the dollar break to new highs for 2012, and it strengthened against many of the major currency pairs. The euro dollar is trading at the lowest level in 22 months, and the dollar franc is trading at the highest level in 15 months. So what we're going to watch for this week, of course, we want to know that the market is closed on Monday for Memorial Day, and we want to take a quick moment to honor all of our veterans and our active servicemen. What they do protects our country, and we are certainly in great gratitude for what they do for our country. We do have consumer confidence here on Tuesday, GDP on Thursday, also ADP on Thursday, but employment situation on Friday is probably going to be the biggest market mover of the week. Let's pull up the charts and take a look. Okay, so here we are looking at our market sentiment stocks. Well, not stocks. We have currencies. We're looking at the dollar, we're looking at gold, and we're looking at crude oil. And as we zoom on in, you can see our dollar has gone to a new high. And how I drew this line was actually taking the time and zooming out a little bit, coming off the daily, going out to the weekly. And you can see this little consolidation in here. So that's where I drew in this line. So going back to the daily, we can see dollar new high for 2012, new high. Again, well, let's go back to the weekly. Last time we've been in this range was back in September. So new highs for 2012 and going back into last year. And so certainly looks really good. We pulled back to looks like the 10 moving average and kind of taking off here. So the dollar's still looking strong. Again, in inverse relationship with the market. The market's looking weak. The dollar's looking strong. Definitely the dollar against the euro has been very well. Going over to gold, strong dollar. What does that mean for gold? Well, it's been weak. And you can see we've got this wick in here from September. We got another wick in here from the end of December, beginning of January. Another wick in here from last week, and we're wicking in here again. So sideways to down here on gold. And finally, we'll take a look at crude oil. Great for our pocketbooks. So much talk about this rise hitting the high in February, and we've really fallen off that. Not only did we fall, what was once resistance of 102 became support. Once we fell through there, we fell through there really quickly, and now we're coming all the way back down to $90. So we'll see if $90 holds up. Of course, for us in our gas tanks, we want it to fall even more, but definitely down on crude oil. Okay, so now we are going to go ahead and take a look at our currency pairs, starting off with the euro dollar. And here we really get a good look at this downtrend. More importantly, we see that we finally broke the January lows, and now we're making new lows. So in order to get an idea of where we may go, of course we are oversold. In order to kind of get a gauge of where we might go, let's switch over to a weekly. And again, you can see we're going all the way back to 2010 here. Looks around May, June-ish. We have a 1.2 low that we're going to be watching. So that's our next support price action, swing low support, if we continue to move lower. Again, we're obviously oversold, even oversold on the weekly, on the monthly. Also, well, you can see the monthly has a little bit more to go, really, but for the most part, the monthly is oversold, and we can see the 200 moving average may act as support also once we get to these 2010 lows. And that's really, if you look at the monthly, once we got above the 200 moving average, every time we came back to it, that's where the buyers really came in. So we'll be interested to see what happens with price action once the euro dollar gets down to the 200 moving average 1.2. Switch back to the daily and move over to the pound dollar. So here we've broken what little uptrend we have, and now we're below the 200 moving average here, and you can see we had some swing lows right in here at this 1.56 price level. See all these wicks in here. And that's where we're pausing a little bit here. If we break this 1.56, it makes sense for us to come here down to 1.53 and test that January low. So that's a good visual for you to show you how weak the euro dollar is compared to the pound dollar here, which is nowhere near the January lows. And we broke the January lows for the euro dollar. Now let's zoom out for a second, just to give you another view. And again, really showing you that the January lows is still going to be our next support level, and that we have more room to go to the downside, according to our basic indicator. Do we look at that on the daily? Daily is oversold, so we don't have dual time frame again because the weekly still has more room to go. And the monthly still has more time to go. Monthly, let's zoom in here on a monthly. Monthly is still technically trying to get into an uptrend, so resistance of the 50 and the 200 moving average. So still potentially more room to go. The downside for the pound dollar is certainly not as weak as the euro dollar. We're going to finish off with the dollar franc. And here we can see breaking into new highs. We broke above the January highs, and we're above all the moving averages, so we're breaking the new highs. So where could we go? And of course, we're a little overbought here. So where can our price action go now that we're above the January highs? We'll zoom out, check some order time, because again, we can see long term we're in a downtrend. So where could we go from here? Well, we'll take this, extend it over. You can see, so our next swing high, next price action matches up with right here. Also get this swing high here, swing low right in here. That is right around 1. Right around 1 is our next target if we continue to move higher. We'll go all the way out to the monthly. Switch back to a pointer. And we can see trying to get in an uptrend here, trying to get up to the 50 moving average. That will be really interesting. We're getting above the 20 moving average right now. Getting above the 20 moving average. And we're at one, we also did the 50 moving average, so it'll be interesting to see if that holds up its resistance. More room to go to the upside, though, here on the monthly chart. As we come to our watch list for today, we're starting off with a low volatility watch list, which is our 1 hour time frame using Bollinger Bands, looking for that consolidation and finding a breakout. And we'll see that all the pairs against the yen are basically approaching this low volatility. So we're definitely going to be watching that. Inside bar, we're looking at today's range and comparing it to the previous day. So looking at Friday, compare it to Thursday. And we do have the Aussie dollar. Now we had a couple pairs on Thursday, the inside bars, but on Friday we only had the Aussie dollar. I think I got a typo there. So we're going to continue our discussion about why is it difficult for people to follow trades. Again, if it's as simple as having a trading setup and following it, then everybody will be rich. Yet we know that everybody is not rich, and that's because basically people have trouble following rules. They allow their emotions to make their decisions instead of being rules-based trading. We talked about 3 reasons last week, but this week we're going to talk about 3 more. And the first one we're going to talk about is the inflexible mindset. Now, one of the things we know about the market is that it is constantly evolving, it's constantly changing, and you have to adjust your setups with the market. As the market changes, so does your trading setups. Doesn't mean your plan has changed, but one of the things I always talk about is identifying the type of day, and that the type of day determines what type of setups you should be taking for the day. So taking breakout trade setups on a consolidation day is an inflexible mindset. Not adjusting to the type of day is an inflexible mindset. Always looking for that setup, but not looking at that setup on the right type of days is an inflexible mindset. And again, refusing to adjust to the market climate is an inflexible mindset. You have to be able to adjust with the market. Also, a lack of confidence in the method of strategy. If you haven't backtested it, if you don't have positive expectancy, then you have concerns about the strategy, and you don't have that psychological capital that you need to pull the trigger each and every day. And so, you'll find out that the trades you don't take are the ones that work, and the ones that you did trade are the ones that don't work. And that even compounds how you don't have confidence in your strategy. And of course, lack of self-confidence. We always say that the biggest key to any trading is developing a trader's mindset. And the way we do that is by backtesting, is by having rules so that we can build that psychological capital that we need to pull the trigger on each and every trade. Always, we want you to comment, like, and subscribe. I do want to say that we do have our new channel, You Make the Call Stocks. I know this is Forex, but we have our new Make the Call Stocks, and we're going to talk about the Facebook IPO, Apple, and Google this week, so check that out. About our resources. We have our investing course, free 5 video course for you. We have our mentor sessions. I have a new client this week that we were talking, and he said to me, "How did you get to be so good?" And I said, in a straight, blunt answer, "I've lost a lot of money." And and again, this is not a game. This is a business, and if you treat it like a game, you're going to lose money. Every emotional trade I've made has lost money. We also have our managed forex accounts, and if you're looking for signals, we help you with that. But again, the key is developing your own trader's mindset so you can have the psychological capital, pull the trigger on each and every trade. Thanks, guys, and I'll see you next time.